Hey Sledge, hey Leah, hey Melissa. Hope I said that right. Welcome everybody. Welcome to the show. 5 p.m. 30 minutes of awesome time for the show. We've got retail sales coming up tomorrow before the market opens. We've got VIX, OPEX before the market opens, or right at the market open, I guess. We've got earnings, spicy earnings coming up all week long. Got Netflix in there somewhere. Let's see. Thursday, yep. Thursday, right at the end. So right as we shut it down for the week. Netflix. That's what I thought right there. Thursday afternoon. Ought to be an interesting one. That's for sure. That is for sure. Anyway, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Just because I predicted in the past doesn't mean I'll ever get it right in the future. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, hire and consult a financial advisor. Hopefully that speaks for itself. Make sure you trust them. Yeah. So retail sales coming up tomorrow. Golly, I haven't even updated the calendar. It's just been a week of Mondays so far. And core retail sales right here. What do we expect? Kind of expect to see more erosion, honestly, as the market dumped out. I don't think people are buying more stuff, so I think we're going to see some more weakness, even though we're expecting 1.3. I just don't see the case for it. I don't see the case for a big 1.3 pop up here. It's going to be higher than it's been. Why would it be higher than it's been for 2 years? That just makes no sense to me. It's not like we had a great month on the S&P. Your top end buyers have been getting murderized since the beginning or since mid-February. So I just don't see the case for retail sales to come popping back up. Just because oil prices have dipped a little bit, gasoline prices have not really come down. I've seen oil dip, but not really gasoline dip. And you're like, the news is all like, oh, well, it's because of, the spring blend cost more money to produce than the full of crap. I thought the summer blends were cheaper than the winter blend. So full of crap. Constantly. Anyway, so I don't know. We'll see what happens there. See what happens. We've got a short week this week. We've got the Netflix earnings kicking off on Thursday. I guess we have some unemployment claims, building permits, Philly Fed. Not really big market movers. Friday, the market is closed for Good Friday. I'll do a crypto special update, I guess. Even though there's not much to talk about in crypto, hadn't been. Maybe there will be by Friday. We can be optimistic. Maybe. Today looked like we were going to get the third green day in a row, but as we come down to the end of the day, Bitcoin and Ethereum have bled off into the red. Once again. Can't catch a break. Right there. Just can't do it. Can't get that continuation through that resistance. Just haven't been able to do it. Tell you what. Disappointing. That's what that is. Will, Andre, Sergio, Don, Joseph, Frank, good to see everybody. Remember, channel members will have priority when we get to the point in the show where we do requests. So if you want to be a channel member, you got a few more minutes. I'll do a little market update, and then we'll get into requests. So hold your requests. Don't be throwing them out there. They get lost in the chat, in the sea of questions and things like that. So earnings will be kicking up here. Like I said, we have Netflix, first big tech report starting on Thursday evening. And then we have Tesla coming up on Tuesday next week. Then we have Apple on the 1st. We have Meta on the 31st. No, 30th. Excuse me. There's not a 31st of April. And we have Microsoft on that 30th also. And let's see. We got Google coming up on the 24th. That's interesting. I got conflicting reports on that one. Interesting. So apparently the 24th. Looks like. It's been pretty solid. We'll see what happens. And that's Meta, Microsoft, Apple, Amazon. Coming up on the 24th also. Looks like next Thursday is going to be a pretty big day. So we've got Netflix, Tesla, Amazon, Google, Microsoft, Meta, Apple. Like that. Should be interesting, right? Never a dull moment in the markets. Well, I mean, there are dull moments. There's moments where it seems like paint's drying, but you know, give it a day or three and something will come up. So this whole correction, tariffs or just regime change? I think it's more regime change than anything. You can say it's tariffs. You can say whatever you want. Can't convince me that any of this correction has been anything about tariffs. Sure, tariff news might have been the catalyst to start it, but market liquidity is the real issue that's going on. That's the real problem. There is low market liquidity that allows big players to push things around. And if something happens, if we get a Lehman Brothers type moment in the market where something can't be covered and starts to have an unwind, and when you start unwinding stuff, you can't, as they say, you can't put the genie back in the bottle. You can't unwind the unwind. Things can come apart really quickly. I think that's what we saw in this big dip here. We saw it across lots of big Magnificent 7 type tickers. We saw it very rapidly erode right here in the S&P. Has nothing to do with tariffs. Nothing actually, like, it was all, like, no tariffs actually went into effect per se that actually had any lasting damage. I mean, everything's been punted off. You know, they collected a couple $1 billion in tariffs. And, you know, a couple weeks ago, I did a tariff thing in the morning. I guess that was back mid-March. Now, there was a little confusion about what that actually meant. And so you produce something like, so you have a phone, right? Smartphone. You buy in the US and it's like $300. All right. When you produce it in China, the real cost for the company is not $300. All right. They don't make it for $300 and sell it to you for $300. You never make any money. You're not staying in business. All right. You have to, as they talk about, like, if you've ever watched like the Restaurant Impossible or whatever, like where Robert Irvine on Food Network tries to go in and help people fix their restaurant. You know, he says you can't sell a plate of food for what it costs you to buy that food and put it on the plate. You have to multiply it by at least 3 because you have to pay your employees. You have to pay your people. You have to pay your rent for your restaurant. And you have to make profit to stay in money and stay in business. And you have to cover the cost of the food. So same thing with, you know, when you're importing, making an iPhone or making up any phone, making your smartphone. There's the cost of what it costs to make it. in the country, like China. We make them and make stuff other places because it's cheap labor, right? Cheap to make them. And those parts, like, so maybe on your $1,200 retail phone, it actually only costs maybe $100 in parts. So when you import that, you're importing it for $100. Right? That import value is $100. It's not $1,200. So when you mark up the tariff, now that becomes a $200 item instead of, if you had 100% tariffs. If you had 50% tariffs, it's 150, right? You pay 50% of this value, not this value. Now, that $100 product gets marked up to $1,200 when it's sold at the Apple store. All right. So if they mark it up $50 with a 50% tariff, or $20 with a 20% tariff, when you look at that, $20, $50 even on the price, like, is there enough profit built in that they don't even raise the price? 50 divided by the $1,200 thing, you're only talking about a 4% difference right there in price. The U.S. Department of Commerce has done a study and shown that for every 10% increase in tariff costs, it directly correlates to a 1% increase in final good cost on the retail shelf. So even if you went 100% tariffs, that would equal a 10% increase in final cost of goods on the retail shelf. So hopefully everybody kind of seeing the game here. We're not talking about doubling prices of TVs. We're not talking about like ridiculous prices of anything. These are the real kind of prices, like, Trump's blanket 20%. The default one, he's putting on almost, trying to put on almost everything and everybody. That's a 2% increase in the final good cost on the shelf in the United States. Now, that's not necessarily the way it works everywhere else in the world. That's the U.S. numbers based on hundreds of years of tariffs and things like this happening. Every 10% is a 1% in the final cost of goods on the shelf. All right. Hopefully that was helpful for everybody. It's it gets to be difficult when you look at it, but it's a protectionist tactic. All right. If it costs you $100, they were talking about, spending money building phones, and if you had to build iPhones in the United States, they would be $3,000 phones. I don't know that that's the reality of it. I don't know. I mean, Tesla builds cars here, and their cars aren't necessarily vastly more expensive than other EV cars. I think automation has a big role that could happen. It's not that we would be employing a bunch of kids building iPhones here in the United States. We'd probably employ a bunch of robots or robotic arms building iPhones here in the United States. And your high-tech jobs would be people taking care of those robots, not actually building the phones on a production line. So, good, bad, or ugly, that's kind of where I see things heading. So, all right. And because of labor costs, robots are cheaper. We're already seeing that. Optimus robots. We're seeing all these humanoid robots coming around. So it's not a stretch. And I welcome feedback. This is the big picture kind of stuff that not everybody necessarily thinks about. So when we look at the S&P, where we've come, where we're going, where we've been, here is the high, right back here in February. Here is the low, right here at the beginning of April. Here we are today, underneath resistance that comes from this high we had on the spike and this low we had right here on the way down. That resistance is right there. As long as we're below it, still downside risk for making our lower low. If we break above it, we have a major resistance zone right here above us. 5,600 to 5,800, roughly. Right there. Got to get through that if we're going higher. Obviously, right? Don't say obvious stuff. Well, not everybody knows that the critical zone is 5,600 to 5,800. That is the critical zone that we have to get through to be able to go higher. We can come higher and stop dead in that zone, turn down, and shock the world as we plummet into the abyss. All right. If we bounce off that zone, we have created a big 1-2 and the potential to flush this down very hard. This is a very stern warning here. This would be the target that we're looking at, potentially going lower if we flush it from that zone right there. Somewhere in below 4,000, possibly 3,800. And then we would probably do another move back up into the 4,000s and a final flush. That'd be a 1, 2, 3, 4, 5 down. Then we'd probably spend the next several years correcting back up to a 618. And then we'd flush again and probably go down to maybe between 1 and 2,000. So this is a critical zone right here. That's why this is critical. It sets up the bigger flush. If we can get above it, we can go on, be happy and ignorant. Happy, you know, as they say, ignorant is bliss. Be ignorant to the risks in the market, go up to new highs, possibly up to 6,600. But then we're going to probably start this entire cycle over again sometime later this year, into next year, if we come up here. We haven't solved the problems. They're not going to be solved. There's systemic risks and problems in the market. We're probably going to have to do a bigger flush out. Whether it happens from now or later, I don't know yet. This is the key zone that tells us. Is it now, in the next couple months, or is it later, on down later in the year, possibly into next year? Hate to be the bearer of bad news, but that's what we've got cooking in the markets right now. We've come to the end of the road. The bridge is out. It's like, but is it, it's kind of like, is it Coyote and Roadrunner? Is this the paper sign, or is this the real cliff? I don't know. Don't have much to tell off the, don't have much ability to tell at the moment. We may need one more retrace before we come up here. That's entirely possible. Get one more dip, then spike back up, and then we'll see. So there is immediate downside risk, and then there's bigger systemic risk right there in the market. Not even joking a little bit. So you may be scared, want to sell all your portfolio. I wouldn't. I still give this a higher probability of happening than this, but if we get up in here and stop, you may want to consider what it is that would make you liquidate everything if you don't want to ride something like this. Because this could take a while to come back up. Could take a long while. Long while. So ES is the S&P 500 futures. It's basically the same setup that I was just talking about on SPX. We did this funky little triangle crap today. We tried to break out, but we basically stayed in it the entire day. I really dislike, anybody's been with me very long, you know I dislike higher lows and lower highs. It's an unreliable pattern that makes it extremely difficult to predict where we're going from here. We had one of these right down in here, and we popped it up here. And then we stayed below that high right over there, which indicates that this was probably like an A. I don't even know. That could be an A, some sort of B with an A, B, C in there. This could be at the top of a B. Who knows what the fudge this is, but it could lead to a dip lower than that low right there, and possibly lower than last Monday, down at 4,800 roughly. somewhere right down in here. So those are the risks. It's unclear. This is corrective action. The trend has been down. If we're correcting the downward action, that means resumption of trend would be down. All right. No way to sugarcoat this. We're in a correction. We've been in a correction since February when we started it. I mentioned last summer we would go into a correction. Now we're in it. This action right here, sloppy, overlapping, not very indicative of what if anything. And we could spike one little bit higher and then still go down here for another lower low, lower than last Monday. It's still all possible. We have a big VIX OPEX tomorrow morning before the market, right at the market open. Basically, they held VIX in here at 30. They held it right in here. All these contracts that are held open, all going to expire for nothing. All those calls. Nothing. Then we could possibly spike it again into next week. That'd be absolutely crazy. Absolute bonkers. Right there. In Q, virtually the identical same pattern as S&P, with the caveat that we've been working on this downtrend of highs right here since mid-March. You know, mid to late, I guess, kind of slightly in the last third of March right there. Haven't been able to break through. Couldn't do anything today. Bummer. So Russell right here, also looking a little marginal. Got this high we made up here. We're significantly lower. This looks like it's all been a B wave. You know, it looks like an A wave down. This all looks part of a B. And we might get a C wave flush right down in here. Possibly. This is all like giant move up, 3 wave. Who knows what that was and who knows what this is. Like the price action is just all muddy off the low. Off. And this did make a lower low right here. So this one did spike up and then make a promptly make a lower low right there. So this price action off this low has not been clear. Nothing's clear. So be careful going very directional at the moment. I've been taking pot shots at stuff. Even oil right here is doing this nasty kind of consolidation thing. Again, got a nasty triangle consolidation thing in this 15-minute time frame. I really dislike that price action. Look at the daily. We're just kind of sitting here, staying inside the range. You know, we had this giant range right here last Wednesday, and we just kind of been staying inside it pretty much, tightening up the range. I think we've been in the target. I talked about that target. I talked about the fact that when we rejected this up here, we might be heading down here. We got it. Now, the risk is that we dip down here. And I was talking about if we dip below 50, we might see a hot war with Iran or the Middle East, hot war in the Middle East, kick off. It's just a working theory I've got. They need higher oil prices, stopping production and slowing down all the output in the Middle East, especially if oil prices dipped, could cause oil prices to shoot up. Never put it past desperate people. Desperate people that need money do desperate things. Be careful out there. All right, I'm going to flip this to the red list so we get a rest of the story. Brent worldwide oil almost got down to the target level right there at 57. Gasoline, after taking a little trip up, we actually came back down near the lows. Pump prices are not reflective of this action right now. Pump price has been rising, but this has just been consolidating. I think they're running behind. I think we were seeing pump prices do this part. Now we've seen this. So in the next couple of weeks, we might see gasoline prices drop back down to be reflective of this price action right here. It's all supply chain things. Like, just because the futures drop today doesn't mean that the gasoline that they bought, 3 weeks ago is, they've pumped it out of the tanks and moved it to the gas stations and sold it yet. So we see this drop right here. It may take it a couple weeks for it to come into the pump prices, to be reflected in the pump prices. I think we're getting the rise. Yeah, and the news was talking about the drop here and the rise. I think this is the rise we're getting. Another couple weeks, we'll probably see prices come down a little bit. I haven't bought gas since November, so I haven't kept up with gas prices at all, quite honestly. So be careful out there. Diesel fuel is heating oil on the futures. Look at that. Made a ultimate low there. We've made the lower low. Didn't quite get down to a level where I would call it a support level. So looking at this, we did a big initial drop down off of that March 22 high. We did a retrace. Comes in at roughly the 618 level right here. And then we've started on another decline. Copy that one right here. But we haven't finished it up. Typically, we'll see like an echo in the market. It won't be an echo time-wise, but it will be size-wise. I would expect it to drop on down here if we're going to finish this baby up. That's consistent with what we saw in CL. The actual West Texas oil, we're seeing this drop but not finish up. And we may see this finish up with a spike right down here. So we're seeing that consistent across both those oil and distillates. Gasoline, on the other hand, it's running behind. Like, we would have to do a major flush here. So we're not at we're not way down here on this one. We did that first initial drop. We did a retrace. It didn't get to a 618. It's doing a little different path. So this is not quite. A lot of people think it's, they're correlated, but they're only loosely correlated. It would take a big drop in gasoline prices to push us down here. There's a supply pinch in gasoline that causes this to stay elevated compared to CL and diesel fuel. Supply constraints, production constraints. And natural gas has eased its way below the roadmap line, as predicted. And the target is still right down here as we ease that off. Could be well into May before we do that. Seasonality-wise, doing the stuff I thought we would do. We typically bottom out in that April-May timeframe. March, April, May. We usually, right in there is the trough. March, April, May. And then we start on the next cycle, anticipating the spike into December. It's just the historical seasonality. Every year you can see the spikes in gas right there. These contracts go all the way out to 2037 at this point. You can see they've got it priced in. They've got the seasonal gas fluctuations priced in to all those future contracts. So if you had gas production coming online and you wanted to guarantee you could sell it for $3.50 in October of 2037, you can sell your gas. You can, sell contracts of gas right now. And then if gas prices go up, you eat it. If they go down, you can cash it in. Cash in your futures contracts. Or you can hold it all the way out there and sell it for locked in $3.50. So, kind of crazy, right? Kind of crazy. Gold's next, though. And we're hanging out at highs. How high can she go? That's a good question. It looks very extended to me. I would be very cautious. I've removed all my gold exposure due to the fact that we are in ridiculous land. Going exponential. Now, we can compare this to a prior going exponential, crazy land. Back here, we came up to a 1618 and retraced. So we're looking at this one. We're well past the 1618. We're up here, like I said, in crazy land. Could come up to 4100, maybe, but we might give it up right in his zone and come back down to the roadmap line. This has 1, 2, 3, 4, and an extended 5. Anything, any little thing could cause it to do a deep, fast retrace. Just right back down to the 272, 1272 right there. We could even hold the 2800 if this came up fast enough, the daily roadmap line. Be very careful. Silver, SI1, that's the next one down right there. Silver looks like the bigger opportunity here, if you ask me. We've got that same retrace that we had in gold. From this high down to the low. But we're just hanging out right in the zone, the 618. Now, is it log mode or is it not log mode? I don't know. Hard to say. If it's not log mode, we're hanging out just below the 618. If it is log mode, we've already moved up through the 618 and we're retracing back to retest that prior high. If and when we can break out, probably going to come up here at least to 61, if not 74. And if we catch up to where gold is, holy bananas. That would be a number. 4x potential right there. 4x. That's a crazy number. Compared to gold, that's already looking like it might be slightly played out. Now we possibly could take it on up, but that's not a 4x number we're talking about. We're talking about maybe 30%. Giant upside potential in silver, not present in the gold chart. Copper. It would not surprise me if this broke through the weekly roadmap line, came down here. It wouldn't surprise me if we bounced off and came up here. Like, at this point, a little bit of a coin flip. We retraced and then pretty much held the weekly roadmap line. So this is indicative that we might go up again. That high, that low, we break through the 618 right here at 480 a pound, and we can see this back up at the 557, possibly 575 area, maybe even as high as 636 really quickly. All right. We got pork and wheat and corn, sugar, cattle, soy, interest rates, you name it. We're to the point of the show where I can take requests. Please use a complete ticker. I'll give priority to channel members because you chose to support me and my family on this thing I do for YouTube. So I'll take priority requests from them first. And then once all the channel members, once I'm basically caught up to them, I'll come back and hit everybody else. So 1, 2, 3, go, not all at once. Seems there'd be some lag. Let's see, Apple. So Apple hit the weekly roadmap line right there. Looking for that to come back up through the 618 level and get the extension on up there. It's basically what we're looking for. So that high, oop, missed when I clicked. That high, that low, 618 zone, right at the top of that little short consolidation on the weekly, 276 on the upside. Beautiful potential, but we got to do the bullish stuff. If we just reject, we can go on a bigger, deeper downtrend, just like all the other things I was talking about. If this is just the first setup, we could be looking at a giant drop back down here on Apple. A lot of people are like, no possible way. It's set up in the chart. Be careful. MO, Alturia. Jump back to the daily. Potential bounce in place. It's weird it moved over. Got that high, we got that low. close above 618, kicks off the entry 61.35. And it probably didn't trigger, yeah, it didn't trigger my alert yet. Probably won't till tomorrow. Anyway, all right. Dun, dun, dun. TNA. Every teenage boy's favorite ticker. We've got a dropout. That's small cap 3x bulls. Be careful on leverage. I'm going to turn off the trades there. That's at lows. And how low can she go? 0 is the answer. There's the high, there's the low. We're in a critical zone here. And this is small caps, so this is IWM stuff. Leveraged IWM. This has the real possibility to come down here on IWM. So TNA, I don't really chart leverage charts because they don't necessarily reflect the price action patterns I follow. So some of them I try to read the tea leaves, but for the most part, it's just pointless to try to do that. Papa John's getting wasted. There's the COVID low, and it looks like we're about to break it. So how low could she go? She broke down. I mean, this is likely to go lower low at this point. Very likely to go lower low. Got that low. We got this high. I would watch for support at 22.97 and at 18. That's the generally the area right there, and could just make a nominal lower low, but don't look too good. Does not look too good. Jump out to a monthly. See what we got. 1, 2, 3, 4, 5, 6, 7. That's difficult right there. This could be 1, 2, 3, 4, 5. This could be 1, 2, 3, 4, 5. This could be a retrace for wave 2, 3, 4, 5. And we could be working on retracing back down to the $10 area right here. If that's the case, this will probably be like 1, 2, 3, something like that. But the hard thing about this though is like usually the wave 2 would bottom in the vicinity of the 4, which would be right in there. So it's possible we hold up just right in the 15 to 20 area. Just the proportions don't look right. That's so looking for an extension to that 22 area, and that could be the bottom, but I'm just not sure at the moment. The downside is probably more likely than upside at the moment. On pizza, Papa John's. NVIDIA, there's your levels. Nothing's changed in weeks. We hit the second level down. We have not hit the third level down. And if we break through that one, coming down here. That's the downside risk. Upside. It's right in here at this point. There's your upside, 164 for now. I don't know. It's got a wicked downtrend. It started accelerating. We're gonna have to break back up through that resistance right in there to go up. And if we bounce off of it after making this first move down, come up here and bounce off, that's the thing to watch out for. Alrighty, FICO. Sitting on the roadmap line does not look very bullish. We have that high, we have this low, Got the 618 resistance. That looks pretty solid. Coming across here. That'd be the resistance. We can get a close above it. We could go higher, possibly up to that 2,500-ish area. If we bounce off of it, that could be the first move down, retrace, and we could see a bigger down. Next move on that one, potentially somewhere in this vicinity, if not further down. So that's dangerous. Another dangerous one, Meta. No bueno. Bounced off the bottom of the roadmap line. Might be heading down here. If we get below kind of your line in the sand is right here for a drop. If we get below there, probably coming down this area right here. Now we could hold right here and pop back up. If the market turns bullish, this one will probably go with it. That 618 is important. We get above it, tips the odds we're going on up to like 1,000, something like that. You know, 793, 839, possibly 1,000 up there. But as long as we stay under this area right here, this high 630 area, as long as we're underneath it, odds still are with us that we may go lower right there. Alrighty. Next up, AXP. Resistance at the roadmap line, which just happens to be, we see this on a lot of charts right now, where we've made a high up here, made a low down here. We've got the 618 and the roadmap line in the same vicinity. That's resistance. Get above it, we can go on higher. Target 1448, 1.1448, 90% of the way to the 1272. Get all the words out. That's a nice big fat upside from 280 to 345 on AXP. Tesla hasn't done anything. No real updates. Got the downtrend highs. There's the resistance. Here's the supports. Running out of room. Earnings coming up next Tuesday. Not much room left to be in here. And if we pop up here, if we happen to break out and stop right in here before next Tuesday, watch out. Danger, danger, danger. There's also the potential that 1, 2, 3, 4, 5. That was a 5-wave down. Could do a 3-wave retrace. That would look something like move back up to 359, 360 area. Right up here. Pop up to there and reject off of that. Probably go on lower low. These are danger type setups right here. The lower low for that one. Potentially 95. Right down there. So there's a resistance. There's a resistance. There's a support. That all-time low is a support on that, the low we had back here, which this would be a nominal lower low potentially. Yeah. It's going to have to thread a fine needle, because if we can break above this 360 area, that sets up the target up here, 550 to 600. I don't know. I am long Tesla, but cautious. DPZ, this one did fire off a daily roadmap bounce right here. Target is right here, 513. Continuation right there. Now it's been kind of choppy, and the roadmap line is pretty flat. If you don't know what I'm talking about and that's kind of stuff, maybe you should go watch the morning show from this morning. I went through like 68 tickers showing all the entries that fired off this morning or last night, I guess, and discussed which ones were higher looked better to me based on trading hundreds of these. Like I went ahead and bought some shares of this one, looking for that pop. And I went ahead and bought some shares of this one, looking for that pop. Right there. So, bought some shares of both of those. McDonald's and Progressive Insurance. All right. So, I'm short. I don't know. I don't know how to look at that. Target, AMD. Bleeding off. Still bearish. Held the... As I talked about, we got to hold this 72 if we're going to turn bullish here on AMD. If we break this 72, we're probably going new low. New recent, new low compared to this low. Back in 2022. Probably come back down to a new low, lower than that low right there. If we break below this 72 floor right here. If we can break above the downtrend highs and the roadmap line that's just above it. I've got my alert sitting right under 120. We have the 618 zone right there, 150. But breaking through this stuff is the initial indication we're going higher. Breaking through that 618 really sets up the potential to go up to new highs. Somewhere around 266. Possibly, since we hit the 618 zone, could kick it off to 450 to 600, but that's a lot of things we've got to get right between now and then. Not very convinced right now. Like it's much easier to fail right now, break through 72 and make a lower low. Way easier to do that than it is to go higher right now, especially in the environment we're in. It's got a lot of stuff to work through. I've been looking for this downside for a long time, but I'm not a buyer right now. Just not a buyer. Like the environment, geopolitical, and the way this chart looks, and the fact that we pushed it down to extremes, it just doesn't make me a buyer on AMD. TMC and the metals company looks pretty rough. Did a SPAC up here and promptly took a dump. 3 waves up, 3 waves down, 3 waves up. Continuation lower would look like a real possibility. I'll be very careful on this one. Loses money like crazy. We're not in an environment currently that is conducive to losing crap tons of money. I wouldn't trade it. Be careful. Forward. There's the target at this point. Almost got there. Big change from where we were, I was bullish back here, but we promptly screwed that up and set up a downside. Looking for that to hit that 787 target. If we can do that, possibly we can work on the bullish stuff, but got to get through that first at this point. TSM. And we basically got right down to the target. Held. Turning back higher. We break back above that prior support turn resistance. It will be resistance more than likely. Have to pop through it. Pop through the roadmap line. Pop through the 618 zone. That's a big bunch of stuff right in one spot. So it's a big dangerous spot right there. If we reject it, we're probably going lower than that low we just made. If we can break through, upside target, right up here off the screen, 245. That's TSM in a nutshell for you. Dun, dun, dun. All right, made it to the bottom. Now, channel members, if you have anything else, I'll give it to you toward the end. Go back to the top and hit everybody else. That I skipped. JNVR. Looks like a nasty piece of garbage with the reverse split. I wouldn't buy this ever because of that right there, that reverse split. That right there puts it on my can't buy it list. It's just my personal rules. I don't buy things that reverse split unless it's a very, very, very small risk. Like this one, another one, reverse splits galore, piece of garbage. Probably gonna go back down. It was never these prices. Those reverse splits made it look like that, but that's a downtrend. So check it out right there. Reverse to a 618, extend down. Coming up to a 618, potential to get up in here. And come on down again. Just be careful. Do whatever you want with your money. This is a not tradable for me. And NEM. I did a request show at Timing Research today and did a whole bunch of analysis on this on this tab. Here's what we got. I am very cautious on this. We had this high right here. We had this low right here. We came up to this 618 and rejected violently. Held a higher low, but we haven't been able to break out yet. Gold is up here. 1618. But this gold producer is not making a higher high. We're making a lower high. You draw this line across here, and we're sitting there right at the resistance. That scares me that we're going to do that right there. Be careful. That's what I got to say. Be careful. When we rejected the breakout here, even though we have the potential to come up here, not feeling it right now. I did not like this violent chop right here. This was not the kind of price action that I see on something that's going to pop. So we're actually stopping at the 100%, where this first move up and this move up are the same size. If we reject down, we're going lower low than here and maybe lower low than here. Be careful. Chasing NEM. I have no exposure to it anymore. Marvell, hunting for this support to hold. If we get below that 45 level, probably going lower low, 28. Celsius, there's no change here. I'm just going to hold this for a long time. If you bought it because I bought it, I'm going to be holding this for a while. I've been selling upside calls at 40. I think it was. Probably sell more at 44 if we continue to push this higher. My current calls expire on Thursday at the market close. And then I'll probably work my way up to 50. This has the bigger potential to rally up here. This is not like a fast hold. This is one that probably going to take a while if we do that. Could be out here late in the year, maybe even next year, maybe even 2 years from now. Nice potential, but it's got to do something. Now, can it do that if we're burning down the economy? I don't know. It may stop at a 618. Right there at the 50 area. May stop right here, dead cold, and turn down and melt down. I have to make some hard decisions right there if I'm going to hold it or fold it. And MP. I think somebody requested that earlier. It hit the target. I'd be out. That's it. Done. I would have closed it up here. Now we're already back down here. Now you gotta wait for another cycle. Nothing clear. Built the dog. That dog. Potential to bounce here. There's the line in the sand. We break below it. Going down lower. We can bounce. Got to break through the roadmap line, which is actually down here now. Got to break through that to go higher. I don't know. Got a lot of upside stuff to do. That's a lower high. So potential that this, the signs are that if we break below here, we're going down. Could be one of those situations where there's your first move down. There's your potential next move down. 50. I don't know. I know everyone wants me to just tell them what it's going to do. I don't have a crystal ball. I just have technical analysis. I can point out things, and when charts wreck the pattern, they wreck the pattern and mess up stuff, and it's your warning signs. So this is a key resistance right there. As long as we're below it, probably going lower. Once we get above it, tips the odds we're going higher. That lower low, oh, look at that. I've even got a target down here. 72 to 69, you know, basically low 70s, around 70. AIG, Uber. Got to get the E in there. Just chopping. That rejected that 618 right there. Then came down and didn't make a lower low. Come back up again. Could make another trip down here. Could. If we break through that high, probably coming on up here to that 90 area right up there. It's been really choppy for a year now. It's really choppy. Not really indicative that it's got any kind of trend. I'm a trend pullback continuation trader. So when something looks like this, with lots of this, that's the trend is more of this would be what I expect. So more price action in that range would be really what I expect on Uber. Stocks at rest tend to, it hadn't really spent a lot of time just hanging out in any particular area. It's always been kind of trending up or trending down. It was the first big consolidation where it hadn't really gone anywhere for a year. Now the risks are, come June, Tesla puts out their driverless cab thing in Austin. Works flawless, near flawless. Uber takes a spill. I don't know. Risks and rewards. Maybe it doesn't work. Maybe it gets outlawed. Maybe it kills somebody. Who knows? AMTM doesn't have enough candles to do anything with. There's no roadmap line. There's nothing but a downtrend. Probably going lower. And next up, Breeze. Breeze. Probably coming back to the lows. Why miss an opportunity to make a lower low at this point? Be careful. IPOs are usually bearish. That's pretty much bearish. That doesn't look like a bullish continuation. That got deep. We're in the danger zone for going lower low. Lower low would be down at 19, 20 area, right down in here. TTD, trade desk. Stepped across the line. Tip the odds. We're going down 32. Market's back open. Futures are back going. Futures are chooching and chewy. Well, there's what I expected it to do. It's going to be crazy if it does it. So, upside targets 42, 43, 47. 42, 43, 48. Something like that. Went just a little deeper than I thought. So, where'd that come from? It came from that right there. It's an echo. This correction was just a copy and paste. So we're looking at something up here in the $46 area. That is a market echo right there. Potential for that to play out from 34 to 44, 48, 46, 47, 48, right up there. And time-wise, they usually match time-wise also. So we're looking at somewhere in July, going from 34 up here to 46 by July. Not too shabby right there. Could it go down? Sure. And this relatively immune to tariffs. It's just a market, just a straight up market echo. That's why this arrow was there. That correction matched that correction. The response out of the correction usually copies over. So they're not perfect. It did go just slightly lower. This won't be perfect. It won't stop exactly on the dot. It may go a little farther, may stop shy. They're never, echoes aren't perfect. So echoes aren't perfect copies. But there you go. That's chewy for you. Snow potentially completed the correction we needed. We have a steep downtrend of highs cooking. Need to see that break. If we can break it, break through the roadmap line, break through this downtrend that's a bit slower. Big slow downtrend of highs. Sets it up for this 320 target up here. 260 to 320. I'm long a share and long a leap. TTW Take Two Interactive. Just clear all this stuff off. And it's finally getting its act back together here. Got this high, this low. Working on a breakout. 243 target, 271 above that. Simple as that right there. Dell. Did it bottom? That's the big question. I have no answer for you right now. Could be a measured bounce. It's possible. 337 would be the upside. If it does do that, this roadmap line coming down is resistance. The 618 level right around here, probably around 135, is going to be resistance also. A little bit lower, 120, 123, 135 is right around that. I was looking at this high right here. We're going to have to beat that. So regardless of where the 618 is, we're going to have to beat that prior high to be able to get these upsides. And this may be the real target. Like this is a target right there. This is another target, 330. So 205, 245, 330. Those are all upside targets, but we've got to, we're sitting at the bottom. We're closer to the bottom we are to getting the new trend going. So this did a big up. It did a big three-wave retrace. Held. That's good. Initial thing we wanted to see. Got to break through the downtrend of highs and through the roadmap line and through the 618 and through that prior consolidation. That's and to get that continuation. Biggest upside potential is all the way up in this 530 area. Pretty nice. Nice potential, but it's gotta do a lot of things. QCOM pretty much busted the pattern here. Pretty much wrecked everything. Step down right to the line. Put a toe across and then pulled itself right back up here. That's a warning sign. If we come back down here, probably going down here below 100. Got it. Now it has to do bullish stuff. If it flinches at all, it's very likely we're coming back down. So the roadmap line, next test, the bigger 618, which is probably sitting right there, would be my guess. Oh, look at that. Pretty much sitting right there. 180. Gonna have to get through that for the confirmation that we're going higher. That pushed the limits. That pulls the target down. Unfortunately, down about 300 on the upside. DG. Oh, I love that. So when I talk about got to break through, that broke through, back tested. This is a bullish potential reversal. Giant upside reversal potential on DG. Does have further downside potential at 58. But the upside on this baby, probably up here in 2000, like up here in this ridiculous area right up here. Beautiful potential right up in there. And zoom. Well, it hit the downside target. That 618 level doesn't look like it's in the right place. 97 target if we can break through that gap fill. Gap fill in 618 at the 81 area. 97 would be the upside target. If we reject off of that, though, probably going to go lower low than we made back here. That was a giant bubble pattern. I talk about these bubble patterns. There's a consolidated, broke down. And if you've not seen this before, it's right here. Go exponential. Everybody's a genius. We're all going to be rich. Got to tell everybody you know. Just got to cool off. And then, uh-oh. So we did that. Now we're working on the next phase. Can we resurrect any kind of bullishness out of here? I don't know. Looks really rough right now. That's not exactly the best, strongest start to a move up off the low. We held a measured bounce. That measured bounce only puts us to possibly the 122, 140 area right here. Then we probably retrace back down to about 100. Then we may get a final little squeak out of it, possibly to 195. And then the unfortunate part is we're coming all the way back down here again. If it's going to be bullish, it's going to take some work to get out of that right there. Now you can make a bunch of money on those swings, but tough grind. BCE down to the target zone. Did not make it to the resistance. We went down for the target. If we break down below here, that's where we're going, 17. That's what we got on BCE. Ever. Where did this come from? Like, you're like the third person to, like, I did a request and like 2 people requested Ever today. I don't know what the deal with where did this come from today? It doesn't look like a stock that would brought. I mean, I don't know who was talking about this today, where anybody got the information about this, but it just looks like it's not going anywhere. It's back. It's at the IPO price. I mean, for gosh sakes. Hadn't done anything. Just goes sideways for 6 years. There's no trend. There's nothing cooking here. If anything, this looks like it's about to do another dip. I mean, just look at the market roadmap potential. There's the high, there's the low. 33 on the upside, 31, 33. If you were just focused on this, look at that big picture though. This could easily break down. I don't know. BMO. Probably going to come back to the 618. It's under the roadmap line. MTN. Probably going to go down here. Already on the way. PRGS. Under the roadmap line. Watch out for a further decline. It's in the box. Sideways chop. Watch for the return to the bottom of the box. Possibly a trip out the bottom now that we've done a trip out the top. Oracle. I don't know. Can that be it? I don't know. That was not a very clean reversal. May need to trip down to the low 100s. Right down here. Thinking we might need that little extension before we can actually reverse Oracle. Suppose it's a late play on AI. The problem I've got is this looks kind of exponential, like a we're trying to catch up, and then we chopped, and then we broke down. Can take it right back down. And ENPH. Well, broke down. Ooh, ugly, ugly, ugly. Next area down's in the 30s here. Right like that. All right. SAIC. That gets requested like every week. Still the same. Under the roadmap line. Extension lower. That's what that looks like. Till we break up through 129. Any nets. And possibly we bottomed out. No indication we're done yet. We get down below this. Coming down here. 30. TMC already did. DIS. Potential to extend that one down here. We touched the 80. Yeah, we touched 80 right there. Potential this could be done. Resistance is all the way up here. Continuation would be right there. This is a downtrend. Continuation is down on that downtrend. Be careful. SKX. Well, that looks almost the exact same thing. This is downtrend, continuation down on Skechers. SPUX broke down below. We stepped across the line. That starts to indicate that we might, like if this falters at all, we're going lower low. This target comes back to active right there. Apparently, tariff fear on coffee, you know, right? I don't know. Makes very little sense to me right there. For Starbucks. F we already did. STM. A lot like Skechers and others. Watch out for the next level down at 12. And EXE. So it means short Papa John's. Maybe. DPZ, you know, isn't necessarily long-term bullish, but it does have a short-term potential. This popped up, hit the 1272, retraced. So that's played out at this point. There is more resistance at 120. There's the high, there's the low. 117, 120 on the next bounce. Got to clear the 107 area. Got to clear that 107. It had a gap down, so that'll all give me resistance all the way up. Right there. TRS. Oh, goodness. Stiff's just sitting here, not moving. All right. That's been bleeding off. That's a downtrend for years. See this, right? Like bleeding off, bleeding off, bleeding off. There's the COVID low. Might be working back our way down to it. All right. And I don't remember where I stopped. INTC maybe. And we're down to a target. And the next target down is here. Thought we might come back down. 16 support and then 10. Your levels. Google. So we held the floor. That's resistance. There's only been one big move down so far. Looking for potential rally back up to this area. Got the roadmap line in there. Does have that potential where we consolidated right over here. So that potential resistance. We're looking for a pop up in here. For a potential drop. Or a break on out. Resistance here. Continuation higher. I don't know. Here we are on YouTube supporting Google. So what's going to happen? Now, it's interesting when you look at the financials here for Google. Their price to sales is 19, which is basically the average on the S&P 500. So they're right in line with the average S&P 500. And on the price to earnings, I mean, price to sales is 5.6, which is really low. Really. Oh, that's cool. Meta's is inflated compared, like Meta inflated compared to Google. And then Microsoft is way inflated. If you look at Microsoft, Meta, and Google all kind of doing similar stuff. Microsoft the fluffiest, 30. We got Apple. Arguably, they mostly sell hardware. They have a 32 PE, but a 7 price to sales, almost an 8. So if you look at like Google versus Apple, Google is way better value at the moment. Way better position. Then you look at this one. This is where it comes to crazy town because you're over 20 on your price to sales. That just doesn't, like, PS over 20 doesn't fit. Now, long term, it's kind of hung out in this vicinity. But that's elevated by any, like, that's a extreme growth company kind of price to sales, and we're just kind of steadily growing. We're not extreme growth company growing. And a couple billion, and a couple billion. Dangerous. Anyway, so Google's danger, but opportunity. If we break down below the lows, how far can it go? Next support be down here at like 131. Already. Coin made a lower low. Hadn't done anything bullish yet. That was the lowest low at this point. Resistance all the way up here. Pretty sure I removed all these things before. Just clear it off. So we made a lower low. This high, this low. There's a resistance up there. No indication we're going higher at this point. Now, the question in my mind is that some sort of wave 2? Like, was this a 1, 2 with a 1, 2, 3, 4, 5, 4, 5, and this be a 2 in the vicinity of the 4s? Maybe. If that's the case, it was a very shallow 2, but could set up the potential to rally on higher. Maybe as high as like ridiculous numbers, but that just doesn't look likely at this point in time. When you've got this all-time high sitting here and that major resistance right there. Much more likely to, if we're going to pop, to stop right in this vicinity right there. Maybe up to here. But we got to have Bitcoin move. If Bitcoin fails back below the March 24 high, all bets are off on coin, even staying solvent through the next crypto winter. Spotify held up really well in the face of all the tariffs, and 683, 7111 on the upside. Shopify got whacked a little bit, held a nice support, nice, very proportional 1, 2, 3. Like I said, lots of these charts, the roadmap line and the 618 all in the same vicinity. The upside 141. And Salesforce potentially he's got lower to go. And AEM is at targets. Watch out for the retrace. This is another reason why gold danger. We might get a retrace. GDX also up there with AEM. GOLD, Barrick Mining is not up there. So two of the bigger gold miners not really set up at pretty highs, like gold, Barrick Mining, and NEM, both suffering compared to AEM and some of the other miners. The GDX has been rocking and rolling higher. And we go look at the components here. The NEM is number 1, and it's suffering. AEM number 2. WPM, gold number 4. So the number 1 and the number 4 are suffering, but the number 2 and 3 hanging in there, making it look okay. And WPM rocking and rolling, Wheaton. MRK down at the target. Can we hold it? 70 would be kind of my... I'd want to see it hold above 70, I think, on that one. And LADR. Choppy sideways. Nothing. Hog. Probably going back toward COVID lows. Got the line in the sand here about 19. If we get below it, we may go below COVID lows at 12. And late. It's not a ticker. WMT is resistance right there at 97. And that's it. Thanks for coming, everybody. I'll see you again in the morning. We'll hunt for what's moving in the market. Hopefully retail sales isn't too devastating. And we have Netflix coming up on Thursday after the close. Friday is closed. So I'll probably do a crypto special in the morning. And crypto's kind of boring though, so I don't know. We'll see. Have a great day. We'll see you again tomorrow. Same bat time, same bat channel as always, 9:15 every morning. I'll be here Eastern time before the market opens. Have a great